I'm selling all my Bitcoin, and in this video I'll share my entire game plan with you. I'm sharing all the steps you need to take being prepared for this bull cycle, and share how I'm doing it and when I'm planning to buy back the Bitcoin that I've been selling today. The markets have been correcting and altcoins have been suffering a lot. Some of them have been going down by more than 70% in the past 3 months. The entire sentiment has faded away. The Bitcoin pairs have been getting crushed. So what is happening? Because stocks are actually rallying, gold is doing super well, but crypto is suffering. Bitcoin dropped to 60k, having the largest correction in the entire bull cycle, while Ethereum is making new lows in their Bitcoin pair. Let's first discuss why this is happening before we're going to dive into the strategy of why I'm selling all my Bitcoin. Well, the first big topic is the topic surrounding the Bitcoin correction. The Bitcoin correction is taking place, and it has been because of the strength that we've seen in the dollar. But there is a crypto intrinsic actual issue, which is the fact that the US is still attacking crypto and trying to abandon most of the cryptocurrencies that we have being called a security, or avoiding the Ethereum ETF to being approved. And that is pretty much pushing down the price of Bitcoin as well. And additionally, the macroeconomic playing field is showing that there is not much interest into Bitcoin, but there is a lot of tension happening surrounding the economic data, because what we've seen, QT, quantitative tightening, has been taking place, in which the Fed wanted to reduce the balance sheet and wanted to reduce the amount of liquidity in the markets, which is usually not a great case for Bitcoin to continue surging. You know, Bitcoin is scarce, the dollar isn't. So when there are more dollars, or when there's more liquidity, Bitcoin goes up in value, and that's when it becomes an inflation hedge. Now, QT is going to stop. QE comes back in as the US is going to open up the policy of buying back treasury bonds for the first time since 2002. And then additionally, we've seen some bad macroeconomic figures happening in the markets, which might result into an accelerated phase of rate cuts coming in. And rate cuts were bullish for the crypto markets, or at least QE is going to open up again. So what did happen on the macroeconomic playing field, and why is this pushing down the price of Bitcoin? Let's move back towards the charts. Sorry for taking a slight moment, but I'd like to make an agreement with you. If you subscribe to this YouTube channel, then I'll make sure that I make the best content out there and the highest quality possible, and that we keep on improving the quality of the content that we make. Today is the 6th Finance Forward. It's out there, where I provide everything surrounding my strategy when it comes to selling all my Bitcoin towards altcoins and more. But everything is designed for you to have a financially stable future, and to get a strategy to make sure that you make the best out of the entire bull and bear market. There's way more coming up: a new studio, new production, fresh content, and way more, all designed to support the journey we have to create a stable future with a more financial freedom. As I mentioned, the economic data wasn't as good as it is. That's why you can easily check Forex Factory, which is technically a website showing all the economic data that takes place, and all the economic data that is actually moving the markets. So this is one of the examples of one of the variables that has been moving the markets in the past period, through which some figures from the past 2 weeks have been showing that perhaps the economy isn't as strong as we think it is. In this case, we had the consumer confidence earlier being the lowest number in the past more than 2 years, or close to 2 years. The latest number was July 26th. In 2022, when it became this low, signaling that consumers are not really enthusiastic about the markets anymore. Then we've had some positive numbers from unemployment coming in at the first start of the week, but then the PMI data becomes lower than 50 again, and lower than 50 means contraction, so that's a weaker signal for the markets overall. And it continued to do so, in which the unemployment rate became higher than expected, but also the non-farm employment change was worse than expected. So there's not that many jobs being created at this point. And there's actually a continuous bad figure taking place. If you recall that the unemployment claims were 208k at this point. The services PMI also were lower than 50, but if we add the number of unemployment rate this week on Thursday, it is 231k, which signals that there is an increase or a strong increase in unemployment claims taking place at this point. And that is very unusual for this time of the year. So if this continues to do so, we might be signaling that there is a weaker economy taking place. So in the upcoming period, that automatically might mean that the increased impact of QE or rate cuts is going to take a bigger subject, especially if the economic data continues to be as bad as we think it is. As also, as we just recall, the consumer confidence, which became lower than expected. Also, the consumer sentiment has dropped significantly, showing that people are feared about the future for themselves, and that weaker economy could be resulting into Bitcoin doing well, in the sense that QE needs to start up again, and when QE needs to start up again, there's more liquidity, which usually has an allocation into crypto. Now, when we're looking at the Bitcoin price action, I've been mentioning that we have been going into a range. The range itself has been constructed in which 60k is the crucial level that we need to hold on to, which technically we are still doing so. But if we look at the trend, we can also see that Bitcoin is making lower highs, lower lows, in which it might be reasonable that we continue to have such a downwards correction period, in which we might be dropping all the way back down towards an area around 54k, or anywhere in this ballpark, finalizing this entire correction, just like we have been doing here, so taking the liquidity. And once we do, then that's the period where we can start reversing back up. But as you can see, Bitcoin is currently on the edge of having the crucial support level. If this crucial support level is going to hold at this point, then everything is basically fine and we are ready to take out the liquidity here. But the ultimate conclusion as well is that Bitcoin is currently anticipating a longer range construction, and that the odds of having a longer cycle starts to increase. When we talk about crypto intrinsic subjects that might be moving markets, we can't deny the fact that within approximately 2 weeks from now, there is a resolution coming for the Ethereum ETF. And the Ethereum ETF application is an important one, but the estimate of having an Ethereum ETF is below 25% at this point. Given the fact that it's so low, the markets are currently pricing it in a negative way. So the Ethereum ETF, whether or not it's going to be a delay or approval, I think the event itself is going to be a sell the rumor, buy the news event. That's why you can see the prices continuing to fall until the moment of the actual approval. In that case, you can see that slowly but surely we are having some more momentum taking place, in the sense that the staking is getting removed from the Ethereum ETF application. And that is important because the staking part might make Ethereum a security. Whether or not it's true, it's in the eyes of some of the SEC members. Because of that, multiple applicants are currently removing the staking part from the Ethereum ETF just 2 weeks prior to the actual approval of the ETF. I'm not saying that there is a chance that we're going to have an approval. There is always a chance that we get it, but the actual approval is likely going to come in July and August, as some of the ETF applications have been delayed by another 60 days. This is, however, one of the most intrinsic and important events in crypto, because there's still the rotation happening in the markets. Altcoins do not move if Ethereum isn't moving. So Ethereum needs to rotate, and if Ethereum rotates, that's when the altcoins start to kick off as well. And if you look at the data for Ethereum, we can see that Ethereum is currently approaching the longest bear market that we have if you look at previous highs and lows during a cycle. And then that doesn't mean it's creating a new all-time high, but just a cycle high in which we refer to the Bitcoin cycles as the narratives in this case. If we look at it, we can see that since October or November of 2021, we are technically still making lower lows and lower highs. And you can see that this was the actual start of the merge, that since then Ethereum is getting continuing to fall south and has actually been losing approximately 50% of its value against Bitcoin. It's a slow bleeder, but we are approaching crucial levels of support, which falls in line with the potential delay or approval of the ETF, after which it's likely going to reverse back up. So we are on the edge of having that reversal, but in terms of strength in the market, this is what you need to see is a reversal of Ethereum, because once the reversal starts to take place, that is also the period when altcoins start to do really well. And we recall from the previous cycles that if Ethereum does well, everything being built on Ethereum will do well as well. Now, there's also a thing which is called the ETF inflow. And I remember that in the previous period I was saying the ETF inflow is likely going to consolidate or become solid, which means that the hype is fading away and then the price action is going to stall or consolidate itself, which we technically see. So what do we see? Well, the inflow or outflow is close to zero over the past few weeks. There's some outflow, there's some inflow, but the net balance is not changing, which means that the price of Bitcoin is also not changing. You should realize that the inflow and the outflow for Bitcoin on the ETF is a big trigger for markets to start moving, as we have been seeing in the previous period. So if the inflow starts to pick up again, likely retail traders will start to use that as a narrative to start buying into Bitcoin. But the halving and the ETF have been taking place, through which it is more likely that we're going to see a case where the narrative starts to change from Bitcoin to other aspects in the markets, and that from the profits being made in that part of the market, it's going to flow back into Bitcoin, and additionally inflows from the ETF. So the ETF is stalling, Bitcoin's price action is stalling too, altcoins are still suffering, and the altcoins are likely going to suffer for 1 or 2 weeks more, and then it needs to rotate. So if that is the case, why am I actually selling all my Bitcoins? I sell all my Bitcoin, that's the title of this video, and I'd like to break that up in a few several parts, because I've seen your feedback and I've seen all the comments from the past videos in which you're saying, hey, okay, so you're thinking about the Bitcoin pair and you're making yourself going into altcoins by making more Bitcoin because you're looking at the Bitcoin valuation, but it's impossible to trade that on most of the exchanges, especially if you are in the Netherlands or in the Benelux. So I'm going to dive into that. I'm going to dive a little bit more into layers of why I'm doing all these things and how I'm doing these things, making sure that you get the understanding of the strategy and how you should be executing it in a bull market, because there are so many videos out there about meme coins and everything that's going 100x and all those big things. You should realize that the crypto markets in itself have narratives. We've seen some and they have been doing well. These narratives will come back, and the narratives itself will make you or give you the opportunity to compound your returns. So you can start allocating towards the narrative and make more Bitcoin by allocating towards it. But ultimately, and that is the long-term process, it is about making more Bitcoin through which you hold on to that Bitcoin, especially if the US is going to increase the amount of liquidity or the amount of US dollars that we have. That is the important part, which means that that is a different narrative or a different way of looking at the markets than looking from a US dollar perspective. And I think if you look at the sentiment right now, retail isn't here in the markets because Bitcoin valuations are super low, but also US dollar valuations are super low for most of the altcoins. And they will come back, but they will come back when it's already relatively late. You know that there is a normal curve in terms of investing. I think in terms of this cycle, you're at the early group of a few percent that is either still holding or looking to invest into the actual assets. And slowly but surely we are crawling up on that actual normal curve. In this video I'm going to talk about the practical part of how you're going to be trading your portfolio on the exchanges, when are you going to be selling, and how are you going to be selling in terms of strategy wise, and what is the ultimate goal overall. First of all, why am I selling my Bitcoin? That is the most important first question. Well, as I mentioned before, Bitcoin is my base pair, alright? So I don't believe, or I don't think that I need to make more US dollars, because if you look at what Bitcoin is or what gold is, they are inflation hedges. So it's hard money, and hard money is just gonna scroll up by the amount of US dollars being created. So if every year 10% more US dollars are getting created, gold is likely going to go up. And history has shown that gold is actually compared to the inflation, and it's relatively stable in terms of keeping your purchasing power over time. And I think Bitcoin is going to go there as well. Bitcoin is an asset that is super volatile still, and I think in this cycle it will go down, and it has a lot of upwards potential, a higher beta than gold, but in the end you keep your purchasing power and can start planning your life. You are not in the rat race of spending all the dollar that you have, because technically the investments that people do in Bitcoin is because they feel the urge of selling their US dollars, because the US dollars are getting valued lower and lower and lower over time. It's just intrinsically going down by a magnitude we've not seen before, which technically is hyperinflation. So Bitcoin is my base pair. This is the case in a bull and in a bear market. Because if you think about the bull cycle, you hold Bitcoin expecting it to go up, and you're only going to transfer that amount of Bitcoin to either expect a correction and make more Bitcoin by trading that actual correction, or you're swapping it towards altcoins because there is an opportunity cost at some point, and the valuations of altcoins are super low compared to Bitcoin in the Bitcoin valuation. And by doing that, you want to make more Bitcoin and swap it back towards Bitcoin at a certain stage. Then secondly, in a bear market, you technically are selling your Bitcoin towards the US dollar because you expect Bitcoin to lose value in the US dollar. So for instance, if you're expecting Bitcoin to drop from 100k to 50k, you make more Bitcoin by having that particular asset or by buying it back. And if you think about that, you are in the end, in the long term, accumulating more US dollar anyway. So if you have Bitcoin as your base pair and your Bitcoin is worth 10k at this point and 50k in 5 years, you're doing great. But if you lose the US dollar in between, I don't really mind that much. The thing is that if I lose BTC valuations or BTC value, that's when I start to get a little bit anxious, because I don't want to lose my BTC valuation. I want to make more Bitcoin. However, by trading altcoins, you can't really time the actual low, and you should be aware of the fact that they can continue to fall. So you will be losing some in the end, ending up by having more because of the risk reward that's attached to it. So I'm having Bitcoin as my base pair, and through that I keep my purchasing power over time. I've also got gold, I've also got silver, and I just decided to sell all my Bitcoin to swap it towards another asset class because I want to make more Bitcoin, and because right now is the actual best opportunity out there in terms of valuation. This risk is being taken by the fact that I've been going through cycles for 7 years. I'm super high on my risk appetite. I trade altcoins like a lot of times. I've been doing it in the previous cycle, in which I have been running my portfolio up significantly, and I'm doing it again right now because this is, I think, the final easy opportunity that you have by allocating funds into altcoins before Bitcoin is continuing to surge, and it might be the final 4-year cycle. I'm doing this and swapping my Bitcoin towards altcoins because I think that there is a huge opportunity cost out there, and that there is a lot of ROI to be made by investing into altcoins. We are here to assist you and guide you through the bull and bear markets of crypto. In the past months, our consultancy has been developing and improving a lot, and we are happy to say that we are going to be opening up again for new clients. The consultancy aims to assist you with your portfolio through the entire cycle, built on your preferences, risk appetite, targets, and goals. In this strategy, we strive to get the highest amount of Bitcoin possible and protect your portfolio for any negative market circumstances, trying to establish a safe way of trading and investing into the crypto markets. Through the link in the description, you can reach out to our team where you'll be the first one to know when we are going to be opening up in the coming periods. If you're interested, then I'd suggest to go there, send your interest, and I might become your consultant, leading you through the entire bull and bear market. So the first thing, as I mentioned, is opportunity cost. And opportunity cost is a very simple concept to understand, which is, this is an example of the opportunity cost. And I've been saying it in the previous videos too, and I would like to share it again. If, for instance, Solana has been going up 3x and it's currently super high, the odds of Solana dropping 30% is a certain chance. The chance that it's going to do another 2x is also 1. But if you keep on having Solana and there is something else out there that has not been moving at all, but it's fundamentally growing in terms of adoption, in terms of updates that are being processed on there, it might mean that the chances of this one going down 30% are slim compared to Solana, and the chances of it doubling are higher than Solana, which creates an opportunity cost. That is also the same by what I mentioned. Currently, Bitcoin has been seeing a massive momentum with the ETF and the halving. That is fading away, but markets and participants have been selling off their altcoins for Bitcoin, expecting Bitcoin to continue rallying, expecting to have a higher return there, which means that altcoins are getting sold off and Bitcoin is getting bought up, which means that there is currently an opportunity cost of having Bitcoin compared to the altcoins, which means that there is a certain reward to be made when this goes back in balance. And there's of course also a risk, but there is an opportunity to be made by trading your altcoins or trading altcoins at this point. And I am very high in my risk appetite, as I mentioned. So I try to do my best of investing into assets that are currently undervalued. So the concept of opportunity cost is the difference between something that you didn't choose and the one that you have actually been choosing. So in this example, you can see that you could have chosen to work for 1 hour and make $20, but actually you have been starting to party for 1 hour, which costs you $10. The difference is that there is an opportunity cost of $30 by doing this, which is the exact same as by, hey, I'm going to go to a nice restaurant and spend $200 there, or I want to invest it into Bitcoin, which might be worth $1,000 in 5 years from now. There's always this sort of balance, and that balance is also intrinsically in the markets or taking place there. So you've always got a risk-reward appetite and opportunity cost of either having an altcoin or keeping an altcoin. And I think you shouldn't be holding an altcoin at all. You should be trading them to make more Bitcoin and keep on having your Bitcoin, and at some point also keep on having your Ethereum. Because there is still the case of the alt season, and it's a stupid narrative, but at least there's still the phases of the markets. And the fact that we're currently not seeing much of the smaller caps doing well or medium caps doing well is because the main driver for the altcoins is not moving. Ethereum has been lasting into a close to 3-year bear market. I think it's 2.5 years at this point. And we just kept on staying in phase 1, which is Bitcoin rallied up. And you can see that altcoins continue to rally as well in terms of the USD valuation. But altcoins kept on losing in Bitcoin valuation, which means that the altcoins have been sold off for Bitcoin because investors think that there's a higher ROI to be made by having Bitcoin rather than altcoins. And that phase 2 never really started. It started selectively because Solana was the one doing well. So everything in the Solana ecosystem did well. And what we call alt season is when Ethereum starts to wake up, so large caps in the Ethereum ecosystem can continue to do well as well, which just didn't happen. But based on the fact that there's the Ethereum ETF coming, there might be a chance of actually seeing a rotation, especially as I just mentioned, the opportunity cost of having or holding Bitcoin and the valuation of the altcoins shows that there is a higher ROI to be made by these altcoins instead of by keeping on your portfolio with Bitcoin, especially since Bitcoin is currently already done with its entire momentum of the halving and the ETF, and it's a whole different spectrum that we're moving in. So this is actually something that keeps on happening, and as I said earlier in the video, the rotation of money is likely going to happen. The rotation is quite close, especially since I think the Ethereum ETF is going to be a sell the rumor, buy the news event. This cycle in that aspect is different than the previous cycle because there is an institutional interest and there's a crackdown based on regulations. So I'm constantly looking at the BTC valuations, and I try to do that the best as I can, but the BTC valuations are an ideal trigger to see how strong a market is moving or is not. In this case, we saw a peak of Ethereum happening here, after which we had a 7 to 9 month bear market, after which we had a run for 5 months, and then a long-lasting bear market took place for 812 days, after which we started to have a new bull run, which was comparable in terms of length, after which we currently, since this previous peak, have a bear market for approximately 900 days already, through which it is very likely that we're going to have a similar length of the bull market happening after this, making every cycle longer than the previous one. But the fact that altcoins are not moving is based on this fact, but it's also showing that the gap between the valuation of Bitcoin and the gap between the valuation of Ethereum, for instance, is getting substantially big. So the risks of not having Ethereum or not having certain altcoins are getting higher than the risks of having the actual asset. So that's what you do by investigating into the cycles. Now, this cycle is also different because if we look at the previous cycles, then 3 to 6 months prior to the actual halving, we would already be seeing Ethereum doing really well. That's not the case right now, and that is based on that ETF. So Bitcoin ETF was approved, did do really well, started to run substantially. The Ethereum ETF is not approved, and the chances of an approval are getting marked by the market at this point by a low percentage of lower than 25%. But because of that, it's getting undervalued a lot, through which that starts to open up an interest and an opportunity cost. So you want to be allocated into that actual asset, because if everybody suggests that it's not getting approved, then the likelihood of it getting approved is significantly larger, as the not approved case is getting valued too much. Just like the approval of Bitcoin was getting hammered to the max at 75k, which was a little bit too much hype in a negative way. There's a little bit too much negativity surrounding Ethereum. But if we compare this and we start looking at the valuations of altcoins, you can also see that, for instance, Arbitrum, and I've marked the actual level that we see here, the level and the activation of the ETF was taking place here. Since then, a drop of 75% took place, and that is primarily due to the fact that people expected more from the Bitcoin ETF. Now we're having the correction across the markets, and that's the moment where the altcoins start to surge. So the Bitcoin valuations of the altcoins are super low at this point. And if you look at it from a strategical aspect, then at this point in time, you clearly want to be fully allocated in the markets in terms of the current BTC valuations. Ethereum is in a long 2.5 year bear market. Chainlink is at a cycle low. Multiple other altcoins have been dropping by between 60 to 80% in the middle of a bull cycle, which is a case of being allocated into the markets. Now, how do you get allocated? What is the max of your portfolio? How do you actually trade it? And when do you start selling? That's what we're going to discuss in this next part, which I think is going to be super important for you. So now the more practical part, like I've been getting a lot of questions from you, as in, how am I actually going to trade these altcoins? Because there is no opportunity to trade them against Bitcoin valuations. And that is tricky because, as I mentioned before, if Bitcoin drops from 70,000 to 63,000, it's down by 10% in your USD valuation. But if the altcoin drops 5% instead of the 10% that Bitcoin did, then the altcoin is outperforming Bitcoin. So you might technically be well off by having that actual altcoin if Bitcoin is your base pair. Like for instance, if we are going towards Chainlink as a chart, it is currently still up more than 15% since the actual low. Comparable is the fact that Optimism did the exact same. It's currently still up 30 to 40% since the actual low. And as you can see, I'm doing this on Binance. Binance has the ability to be trading against Bitcoin valuations, but as you can see as well, there's not a huge demand for that actual pair. If you go towards the top gainers on the actual exchange, you can see that it's only 10 Bitcoin. Here it is 3 Bitcoin, 4 Bitcoin, 2 Bitcoin. So it's not being traded as much as you wanted it to be. Especially if you start looking at an exchange like Bybit, it doesn't even have it. It needs to be valued against USDT. So that is the tricky part. You can analyze everything on the exchange or on TradingView against the Bitcoin valuation. That is great, but you need to be trading them against USDT on the actual exchange. Even if you're looking at Binance, then I would suggest that you're looking at the USDT pairs, because if you compare these two, and let's say SFP, you can see that there is a volume of 5.4 million on the USDT pair, while on a Bitcoin pair there's only 3 Bitcoin. With the Bybit, you can see that there is actually a need to be trading it against USDT instead of using the Bitcoin pair at all, because it doesn't have it. So what you need to be doing is that if you have Bitcoin as your base pair, is to keep track of that by estimating the amount of USD you have in your portfolio divided by the Bitcoin price. Example, if you have $10,000 into your Bitcoin portfolio or in your crypto portfolio, then 10,000 divided by the price of Bitcoin is the amount of Bitcoin you have. Now, if you're trading and allocating it entirely towards altcoins, then every time the week progresses, you need to be continuing to do this. Or you need to be checking TradingView to see the Bitcoin valuations of the actual altcoin, which you will be using as the main narrative to start selling your positions. So Bitcoin valuation versus USDT valuation, as I mentioned, if your altcoin or if Bitcoin drops 20% and my altcoin drops 10%, then I see that there starts to be shown interest into the altcoins, and I am happy because I make more Bitcoin. And ultimately, I want to make more Bitcoin. And I know that you're saying you should have been selling your Bitcoin towards cash and make even more Bitcoin. That's true, but you can't have it all. And in the end, if I double my amount of Bitcoin during this cycle, I'm going to do really well. Especially if the altcoins are having this drop of 70%, there's a very significant chance that the altcoin will go back towards this high and do a close to 3x or 4x actually. And if I allocate towards my portfolio in altcoins, and if it does a triple, so for instance, if I go from 1 Bitcoin at this valuation of $70,000 and it goes to 3 Bitcoin, and that is 210k, if Bitcoin does another 5x, then it is going to be around $1 million in terms of valuation. All right. So in that aspect, we are looking at a case where at this point the altcoin valuations are super low. You can easily allocate a lot towards them, and you need to start gradually selling back towards Bitcoin the way up. So how do you do that, and how do you define your portfolio? My personal thesis is that if you start looking into the top 100 on the crypto on the CoinMarketCap website, then I would suggest taking the larger coins out there. There are a lot of garbage coins out there. But for instance, if you're looking at this list, then you will be way better off by just picking the solid ones from this particular chart, because you don't need a 10x. I would suggest things like Near, Chainlink, Dot, AVAX maybe, not Cardano, Aptos, Hedera, Atom, all projects that are out there that if you look at the current chart for them, for instance, Atom, it has been going down a lot. But if you look at the previous cycles, it has been granting a 2 to 3x, 2 to 4x actually, in return. So here it went from 2400 to 8500, which is an almost 4x, which is enough. You don't need that 10x to be made. If you do a 2 to 3x in BTC valuations, then you're completely fine and well off. Now, what is a potential actual scenario of buying a portfolio? Altcoin portfolio that I want to be made, or an estimate of an altcoin portfolio. I don't have any Bitcoin at this point. So what do? Well, I've got a large position into Ethereum, which is 30% of my portfolio. Then I've got 70% that I divide by 7 altcoins, which is 10% each. Especially if you take like top 50 coins, you can just do that. But if you take smaller coins, then you might be taking 15% into the bigger coins and 5% into the smaller coins, based on the risk. For instance, higher market cap, higher risk, lower market cap, lower risk. Higher market cap, lower risk, lower market cap, higher risk. So that's why you need to divide. 7 altcoins. I've been discussing most of them, but these would be my picks that I will be taking into a portfolio at this point. Alright, so that could be a scenario. You could also say, I want to have Sol, AVAX, Matic, Filecoin, Toncoin, let's say Cardano and XRP. I don't really mind. It's just there are many opportunities out there, which I think that you just need to create a very solid altcoin portfolio. And if you do that, you'll probably be absolutely golden in terms of the next perspectives or the next valuations. So let's just assume that there's one Bitcoin of this portfolio here. How are you actually going to keep track of your risk? And the first question you have is, I have been doing this already, and I think I've lost around 15 to 20% of my Bitcoin valuation. Is that fine for me? Yes, it is, because I suspect that even if we go down another 10 to 20%, I get towards 25 to 35% loss, but my upside is more than 2x. So I expect between 120 to 250% in terms of return, making my risk reward way more positive. Because if I invest 1 Bitcoin in the altcoins, I drop and I lose 0.3 Bitcoin. But then when it comes back up, I end up by having 2.5 Bitcoin. As mentioned, that could be 600 to 800k, and more than a 10x in terms of valuations in the USDT, or in USD. But in terms of having Bitcoin as a whole in a bull cycle, doubling or tripling your amount of Bitcoin is super strong to do. And that is the ultimate goal of myself. And that is also the goal of everyone else that should be into the markets. And I think most of you forget that you lose a lot of Bitcoin value by just staying in the altcoins. So let's assume that I'm going to be buying Atom at this point, or my portfolio is into a coin like Atom. How do I trade it? I'm allocated at this point, and I want to gradually start taking profits. There are a few ways of doing this, especially if you are going to be trading against USDT, then there's a question of when you should be selling. So, for instance, Bitcoin can go up from here to 75k, do a 20% run, which means that Atom can go from 8 to 10, right? That is not a potential sell for you because you're not gaining anything in the Bitcoin valuation. What you want to do is check this chart and see where it goes. So and there are two ways of doing this as well. So if we reach a resistance zone, which I think is 28,800 or at 4,000 sets, you can be starting to allocate less into the actual asset here and start to allocate more towards Bitcoin. How do you do that? Well, if Atom gets towards this level and reaches it here in the BTC valuation, you sell independent of the USD valuation at that point in time. So allocating the portfolio is by doing and buying it against USD on your favorite exchange. Then you keep track of the actual asset against Bitcoin by either screening TradingView or just calculating it for yourself. And when it starts reaching take profit levels, that's when you start to take out your money to USD and swap it back towards Bitcoin to keep on having your Bitcoin. That is one actual strategy that you could be using, or one way of trading an actual altcoin portfolio. Because at this point in time, you entirely want to be into altcoins because of their valuations. But the higher we get, you can see it on the left here, this part, the higher we get, the more you want to be into Bitcoin. So for instance, if Atom is going to get towards the first level of resistance, that might be the moment that I'm already going to be allocated towards Bitcoin for 25%. If it gets here, I want to be allocated for like 50%. If it gets here, I want to completely be out of my altcoins and back into Bitcoin because I've been able to actually triple the amount of Bitcoin that I have. So the lower you are at the BTC valuations, the more you want to be into altcoins, the more it goes up, the less you want to be into altcoins because there is a higher risk of losing your BTC valuation again, and you want to defend that as much as possible. The other strategy that you could be using is if you buy your assets here at this point, if the altcoin goes up by 20%, you sell 20%. If it goes up another 20% against Bitcoin, you sell another 20%. And just keep on doing that gradually, through which you keep on lowering the amount of altcoins you have, you increase the amount of Bitcoin you have, and you keep on compounding your returns. Now, the final part, if you are able to compound your profits and you time it well, so for instance, you're currently looking at a position into an altcoin that, for instance, like near, and you allocate one Bitcoin in it, it does a triple. You entirely close it and you see that many of the altcoins have not been doing anything at all. So you buy for one Bitcoin, you sell it entirely when it triples, and through that selling and the strategy of selling every 20%, you make one more Bitcoin, you have two Bitcoins, and then you add it back into an altcoin that is later in the cycle. So you've got that normal curve. At the beginning part, the first group of altcoins do really well, which in this case has been Solana or any other altcoin compared to it. If you get further in the cycle, smaller caps or other altcoins are going to follow suit. If that happens, you might rotate through the cycle. So if the first one does a 3x, just close it and rotate it through to the next cycle, the next coin. What you could do is that you say, I've got one Bitcoin, I doubled that by trading into an asset that tripled. I've got two Bitcoins, I keep one Bitcoin there on the side. I use the other Bitcoin again for an altcoin, which I can compound again. So timing your altcoins well and then trading it well by allocating less makes sure that you can generate more Bitcoin. And the fact is that if you double the amount of Bitcoin in the next months when the altcoins do well, you 10x your portfolio at the end of the cycle. If you triple your amount of Bitcoin at this point, then you might be doing a 20x on your portfolio at the end of the cycle. And it's all dependent of when you have the balls to actually buy into the asset and actually the amount of how you are trading it. And again, you don't need to use all these small altcoins to make the most of it. You need large altcoins and trade them well. And that's basically it. I hope you have been enjoying this video and have been providing content for you on your journey towards a financially stable future and freedom. If you did enjoy this video, can I ask you a favor and comment beneath on your thoughts of the video or content that you would like to see or anything else that you would like to share with us. All your feedback is super helpful by building and continuing the level of content which we aim to provide. Thank you for watching, and I'll see you on the next episode next week on everything surrounding Bitcoin.